Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Tuesday, March 21st, 2023. So here we sit on the eve of the big anticipated Fed decision tomorrow, Wednesday, March the 22nd. It was, again, a very, very interesting day, but I believe what made it most interesting today is the preparation for the expiration, which actually happens tomorrow morning at 9 a.m. Eastern in the volatility options. So that would be the options on the VIX. And as they continued to push volatility lower, it puts a tailwind, so to speak, on an up move. It brings a lot of buy-side pressure into the market as these positions change, and that would be the outcome. Lower volatility, you buy, and that's what they did. So as this got closer within that last hour of trade today, we saw both the NASDAQ and the S&P just kind of get lifted straight up, particularly here in the NASDAQ, right up into this resistance area, which is 1.618, which would be where wave C, which I'm looking for here, of the minor wave 2, would be 1.618 times the length of wave A. Well, that got exceeded and remains exceeded coming off this afternoon. So while that now turns into support, basically, which kind of almost, they tried to get it back down there, which is 12,866 or 65, which is where that resistance actually was or is. And so now I want to start to layer it up a little bit more, because while we could say, yep, that was it, that it's all done, it doesn't necessarily feel that way. So it's going to be interesting as to how this all comes off. So right now, we got the next layer for the larger C wave at 12,920. It got just below 12,900 today. The high was, let me get right on it so I can get it, 12,898. 2 ticks, less than 2 ticks. 1 3/4 ticks away from, or 1 3/4 points away from 12,900. And long road, getting it up here, lots of buying, lots of speculation, lots of everything. But tomorrow, as I've been saying, tomorrow, direction, speed of, how much further, et cetera, I think will be made very crystal clear. Now, it's going to remain interesting because, see, we got so many financial media that they have to write a story, they have to be able to report something. And so what do? By getting the headlines like this: tech up on Fed optimism. So we'll read another one where they're talking about why the market is up. We saw that somebody came out with a Facebook or metaverse, upgrade today, putting the stock back up close to 300, which is where it started, all this nonsense. Nosedive from 300 down to 90, works its way back under several different scenarios, the biggest one being that last earnings season, the CEO, Mark Zuckerberg, announces, well, we're going to buy back $40 billion worth of the stock. So, hey, just come on, we'll buy it from you. Well, guess what happens? The stock immediately goes up $30 bucks, and then it's been nonstop since. So what this is all about, with the metaverse, it's now cleanly back above 200, and now gets an upgrade that it could run another $90, basically, by this Morgan Stanley analyst. Now, I don't know what his information is. I don't know what the model is. So again, to agree or disagree, who am I? But this is what prompts to come the day before the Fed, et cetera, et cetera, et cetera. It's like, is your timing well conceived, ill conceived? Or, this was a good point to say because tech's been rallying on the hope, women, a prayer of Fed action. Who knows? But that is what was out there today. Even Tesla jumps back into the news. And I'll tell you what the news was. Tesla engineers unsuccessfully tried to convince Elon Musk to keep radar in self-driving cars. That was one story. The one that I read when the stock was starting to rise pretty significantly was Elon Musk decrees that the Fed should lower rates. The Fed should ease at tomorrow's decision. And now suddenly it's like, wow, good enough for Tesla, good enough for all of us. We just buy the stock. It really ceases to just grab hold of reality at some point, but there you have it. Adding to today's rally. Now, what didn't rally? AMAT. Turned it right around, down, off 3. AMD, down. Micron, barely higher. So, it was truly a mixed bag. Microsoft down most of the day, finds a leg up towards the end of the day. So again, tomorrow will be very, very interesting. Now that we have the volatility expiration done and completed, all of those options, that all is finished tomorrow at 9 a.m. So what we'll have left is all of the speculation and all of the to-do for the Fed. How much higher they want to push, I don't know. Can I consider this move complete if I'm putting this is where I'm putting, come on, wave 4. Then I got 1, 2, 3, 4, 5. Now, I can't really see any breakdown in here on the hourly chart, right? But I could probably say 1, 2, 3, little 4 coming in. We get a 5. Maybe we get up to that level. But let's just take a peek. What I'm going to put in now is another layer, and I'm going to do it for the third wave. The third, because we're going to compare it, because there's the 4. So we're going to look at how far the 5th wave can get when compared to the 3rd, right? Its distant cousin, right, is the 3rd wave, or its closest relative is the 3rd wave. We'll go to there, to there, to there. So here we have. Wave 5 would be equal to 50% of wave 3. Bam. 12,921. Where do we have here? 12,920. Sincere, direct overlap. In fact, prices are the same. That would be 50%. Well, it's 38.2%, long gone. This still going to be in there. We'll see how far they want to drop it in this small wave 4, if indeed it is wave 4. If this is all done, then we're looking for what? We're looking for the market to reject everything and just start to come tumbling down. Do I think that's going to happen before tomorrow's Fed meeting? No. Which suggests very strongly that we likely will still have additional upside, which it could be reached overnight in the Globex session. So we may miss all the pomp and circumstances of reaching the high, and by the time we come back in tomorrow morning, it could be much lower. So, but that would be my picture for tomorrow, and it completes it. Now, can it extend even further? It sure can. It can. Here's the rest of the numbers. 13,013. 13,081. This number is for the entire C wave, where it would be 200% of the A wave at 13,113. Again, not knowing what the Fed's going to do, can I say that an impossibility, never going to get that high? Actually, no, I can't. The reactions that we're getting from our markets right now are not matching anything, except the hope, women, and a prayer that the Fed is going to not raise. So what really is kind of going on? That the narrative is being spun that, well, look, see, Credit Suisse or United Bank of Switzerland is going to buy Credit Suisse. Oh, look, First Republic went up today. In fact, let's go take a look at that stock while we're here. went up 3. Actually, it was higher. And in the after hours, folks, that was the high. 1967, the high today. Coming up. Although I will say, not a bad little pattern. But guess what? A, B, C. So who knows? So off of the high, it's already down $5. Off of this closing high, it's down $1.50. So what's reality? What's not? What is just an over? What isn't? What are they hanging the hat on? What are they not hanging the hat on? We're witnessing it all. We're witnessing it all right now. So I'm not going to go out on the limb and say, okay, this is possible, that's not possible. But what I do know is that the solution for the banking crisis, it's not over. In my opinion, folks, it hasn't even begun. Do we really believe that the deposit regulations that the Fed had on that got taken off in 2020 and never put back on is just going to be so held to just First Republic, Key Signature Bank, Silicon Valley Bank, Silvergate Capital, that no other banks, regional or otherwise, are going to suffer the same fate because they didn't have any regulations that required a bank to hold X amount in reserve in case they did something stupid like put on bad trades and not hedge them, like Silicon Valley Bank did, like Key Signature Bank did, and probably many others. So this story has just really begun, and it's now, what, a week and a half old? The market has become so closed, and just like, it reminds me of if you've got a bunch of horses and you've got them all attached to a cart, and you're pulling that cart. You remember they got the blinders on. Why? Because we just want them to go straight ahead. We want them to go where we're telling them to go. If we don't have the blinders on them, then they're going to see both sides, and they're going to get spooked, and maybe that they're going to just, jump the gate or whatever. So that's the deal. Well, traders right now are so focused. Everything is focused on, I need to have the good banking news. I need to have this news, all because I got to have this bullish picture. That's what it feels like. Okay, here's your bullish picture. We've done a really massive run, 1,000 points in the NASDAQ, low on March 13th to the high on March 21st. 1,000 points. That's a pretty massive rally, if you ask me. And how quickly can that come off? Well, we're about to see. If this doesn't turn out the way they want it, all of this needs to get unwound. And it'll happen very, very quickly. Because again, remember what I'm counting here is a minor wave 2. There's the A, the B, which was irregular, the C wave, which fits now cleanly to the Fibonacci numbers for an irregular. It's all lining up. So what comes next after the minor 2, the beginning of a minor 3rd? So again, I stress and I say that when this is over, we will witness big rejection. Something like that, but bigger because we're much higher. It's gotten that much more extended. So I think from here, we very quickly break down below 12,500. So you lose 400 like real quick, and then lose another 400. We've seen the NASDAQ go down 800 in a day, folks. Don't count this thing out like it'll never happen. It can happen. Go back into his more recent history. Granted, we had a pandemic, so there were specific reasons, but this will be another reason. The Fed doesn't cut. The Fed does raise. Maybe they raise the 50 basis points, which people aren't really putting into any conversation. What if they do? How's the market going to react? I personally feel if they ever just decide, well, we're going to ease so that we can just really get a control of this banking crisis, which now they got Janet Yellen going out and stumping all over the place. Oh, yeah, safe and sound. We're good. We're good. Really, Janet? Weren't you just like a week ago before the Senate and talked to the senator from Oklahoma and said, will you bail out the banks? No. Weren't you one that actually told the press the week before that on television that the Treasury would not going to bail out or pay the uninsured full pop? So now we're supposed to believe you that the banking system, that we're all good, we're tight, we're fine. So when they continue to put that narrative out, it's for whose benefit? They don't want to see the panic. I just ask, look into their eyes and tell me what you see. Anyway, back to the NASDAQ. Moving averages now, look, we got the 200. It's really starting to now rise strongly. And so is this, but so is this. Now let's go over and quickly just look at that daily. Yep. 200 is still flat. The other still flat. The 50 nudging its way. The 20 now back above that 200 on the daily basis. The 8, which is the 8 SMA, the simple moving average, is just crossing 12,459. Excuse me, aren't we at 12,800? Yep. So while that's still a positive candle and a big positive candle, is it exhaustion? What could it be? We'll see. So again, while our hourly chart looks pretty dang good, I'm counting it out. And I'm counting every nook and cranny and every move down to sub levels, which I'll show you as soon as I get over to the S&P. So again, for tomorrow, I do think, and again, it could happen over Globex, a little bit more. There's the target. So each day I can add additional layers as the market continues to conclude the wave pattern going up. I could probably put one more onto here to here and give us that final. So, but I'm going to let it see what it wants to do overnight, and we'll see what I do tomorrow morning. If you're in the trade room, you're going to get that number. Over in the S&P, another very clean, beautiful pattern. S&P, here we have minute wave 1, and we're looking at a minute wave 2. Now, I adjusted one more time. I had a great conversation with my Elliott wave teacher, my first Elliott wave teacher way back in the last century, Dan Ascani. He and I are joining together. We're operating my trade room together. We'll be expanding that, adding a lot of new detail, and restarting the expanded version of the Logical Signals trade room, hopefully on April the 3rd. Had a lot to get ready in between then. If you want more information, please drop me a note, leave a comment, send me an email, and I'd be more than happy to answer. We're going to have a tiered pricing system, and it's going to be a great trade room. There's going to be a lot of institutional material that we'll be sharing on a daily basis, looking inside everything that's happening, looking inside the different moves, looking inside what the algorithms are doing. So there's a lot of information that's going to be provided, but let's get back to this. So originally I had said ABC, but I didn't put that. I said ABC, A, put this as the B, put that as a C, and this is the X wave. Well, in discussion with Dan, he said, well, what about this? ABCX, 1, 2, 3, 4, 5, A, B, C. Because I was having trouble counting this as the second ABC, strong, doing exactly what that upside C wave should look like, but I didn't like to have to think that this was A and this was B. And then my conversation with him today, he said, try this. It was right. Thank you very much, Dan. Accolades. And so now doesn't really change the structure. It just cleans it up, cleans the count up, moves the X wave over 1, and helps me out a great deal. So it's still a double ABC, but we're counting it just a little bit differently. Still the same result as we move forward. So again, here as well, we ended up reaching very high level resistance, actually. The high today was 40.43, and there's still additional that it could go. So let's start to add. What we have now is for the wave 2. That are the retracements for a wave 2. 1.618 still sits at 40.57 or 40.58, or you could say 40.55 to 40.60. I've been using the window 40.55 to 40.70, which would then include this next level up. I'm going to add, excuse me, now another level, and so we can take a look at what this C wave could look like. How we're going to do that? I'm going to use extensions, and closest relative to that C wave is the A wave that happened before. So I'm going to start there, go to there, bring it back down to the bottom of that B wave, C wave. First of all, it smacked on the nose and then backed off from where wave C would be 100% of wave A, and that was at 40.41. Next up, we have 40.57, that bottom line, 40.55, I'm calling it. But then where do we have next here in terms of the C wave? We have 40.75. 40.70 to 40.75. Now that's the C wave. Now I'm going to add one more layer, and that's going to be for this fifth wave. And let's see if we can close any more of these loopholes, again, using extensions. Let's see if I got it. I did. Now I got to open this up, bring it back down. So now we're looking right in here. Okay. So now, again, here's our 100% that we went above, and there was a 50% marker right there at 40.42, back down below it. So resistance met, held. Now, what's above it? 40.51, where wave 5 would be 0.618 of wave 3. Well, we have above that. Now we got the 1.618, which is for the entire, oops, let me go back down. It's going to be for the entire wave 2, 1.618. Let me take that back up again. And that's this one here, which is what? 40.55, 40.57. Then we have the next for this fifth wave, 70.5 at 40.59. So here again, 40.55 or 40.50 to 40.60. That's a window. Then we get the next up, 40.64 or 65 to 40.70. And then our final sitting up here. If indeed wave 5 is going to be 1.236 times the length of wave 3, we're up here in the moon. Personally, I think here to here. So we actually have, you could say 40.40 to 40.60. And we could do that overnight. Again, with the volatility expiration done, it's going to be pretty interesting to see how they're going to want to unfold in all of this. Now, just so that we can see our moving averages, I am going to take part of this off. And if you want to get them, as you're watching this, bring it back, fast forward, come back, hold it, put it on pause so that you can pull off these fibs, because I want to get in here and look at our moving averages for the S&P. What we have right now, look at that. The 200, this is the hourly, 200 SMA, is just now kind of bottoming and starting to roll up. The 200 EMA, it's now starting to get a little upward angle. The 50, a little bit more serious. The 20, catching up. The 4 and the 8, strong. So potential for additional upside, very real. So there's, and we already have all the levels. For the wave 2, we have 1.618, 1.70 and a half, 1.705. Those are the levels. That's where I think we can possibly max out. Now, outside chance, can we get up to 4109? Yeah. Outside chance we can. Again, same story as with the NASDAQ. Wherever this level is by the time that the Fed rolls out at 2 p.m. Eastern tomorrow, then we'll, there's going to be a reaction. And this is the part that I can say with some certainty. There will be a big reaction, likely in both directions. Most often when we get into this tight of a wound up spring or coil, then we get that explosion. We get an explosive move and then an explosive move. So initially, I'm going to think no matter what, there's some algorithm out there that's just been geared, no matter what comes out, accept it as bullish and move. And then the reality might be there's another one out there going like, that wasn't so positive, boom, slam. So I'm thinking we're going to get both pretty dang quick. Be real careful if you're determining to trade it, but everybody's on their own there. I'll wait for a little bit before I'm going to jump in and play this game. But pretty much with certainty, we're going to get a humdinger of a reaction off of this Fed decision because of how much is now going into it. So I'm just looking over here and seeing this news. I'm going to go into it just before I finish up here. I'm noticing that GameStop surges after posting. Oh my God, here you go. Look at that. And we think they're all done. Here we are in GameStop. I guess surprise posts a surprise profit. If it's a surprise, maybe you don't want to believe it, but they sure did, didn't they? Closed at 1752, trading at 26. Wow. Interesting stuff. Interesting stuff in our world today, folks. Finishing up here. It all does look still pretty good that we might just kind of rally back up and finish this move. Got a 1, 2, 3, 4. We're in the fifth. The fifth could be done, but I'm going to give it the benefit of the doubt that it has likely. See, 1, 2, 3, 4, one more fifth. And again, can be done by tomorrow morning by when we get back on our computers. All right. I'm going to complete it right there. Our next update will be on Wednesday, March the 22nd.